Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on January 30th. Last week of January, Tuz. It's hard to believe.
It's gone by fast.
Yeah,
We've had a lot of winter weather this year, which has been
arguably too much winter weather.
yeah, it's the worst I've seen it in
It's
my 30 years of living in Virginia.
it's pretty bad. So yeah, sorry, we got Ian Saunders here, joined by Joseph Tizzulo.
Uh,
Yeah, down here in Richmond, Virginia, we're not really used to the winter storms. I
Yeah,
think at one point so we got some weather over this past weekend. At one point, we were projected like 18 inches of snow.
yeah, we didn't get that
We ended up
fortunately.
getting like what 3 or 4 inches of snow
We
right
had
around
freezing
here.
rain.
But now there's 6 inches of ice on the roads.
Yeah,
I had to push someone's car down the street this morning to just get them going and send them off and watch them sail out. I hope they made it wherever they're going.
yeah,
Yeah, it's crazy. Hopefully we can at least the office is warm.
yeah. I mean, you pushing people out. I was trapped in my in-laws because we went over there because we were scared we were going to lose power with the baby, and then we couldn't get out of their driveway for a couple days.
But you made it. You made the great escape.
We made the great escape. Fortunately, I like my in-laws and they like me, so it was
There you go.
fine.
That's all that
But
matters.
yeah, it was good. Um, but yeah, I
Yeah,
mean, I guess talking about markets now, we'll
yeah. I
move past the
mean,
weather talk.
it's funny and a lot of stuff moving around. We're going to talk a lot today about maybe some stuff that we don't normally talk about.
Hmm.
Maybe on the currencies, international equities, commodity side of things.
Hmm.
Um, we saw a lot of movement across the commodity space, especially over the past several weeks. Maybe not as related to the heat, although natural gas did have a pretty good few days there.
It did.
But we saw really to kind of kick things off, looking at the US dollar.
Mhm.
You put a piece in our report. You put a piece out yesterday, I think it was,
Yeah, so
right?
it's
Looking
there
at
now. Yeah.
the dollar just continue to break through support levels.
Yeah, so on its default chart, it's on five consecutive sell signals now. I zoomed out and look at the kind of the longer term 1 point chart. We had built up a lot of support around 97, uh, got down below 96 on a Tuesday. So took out that big area of support, and now there's really not much support on that longer term 1 point chart until the 89.90 area. Now, this is grabbing a ton of headlines because there's, a lot of political backdrop to it, but that support at 90 goes back to 2021. So
Mm.
people calling for, a collapse or whatever it is, I think that could be a little bit overblown.
I mean, it kind of has collapsed.
It has fallen quite a bit, but if we started to take out 90, then I think you would be, that'd be quite a bit different. That'd
Yeah.
be the lowest level in since
I
2013.
mean, but the thing is, like, I always think it's funny. It's like, oh, the dollar's collapsed. Well, I mean, it was at 110 a year ago,
Yeah,
and it's now down to 95. Like,
yeah.
that's a pretty big. The
For the
dollar
dollar.
doesn't move that much, right?
Yeah.
That's a pretty big downside move. I feel like the collapse headlines are maybe a little bit late to the story there.
Yeah.
I mean, we've been in a declining dollar environment since I think it was April of last year.
Yeah.
As we kind of classify by that plus or minus 10%
Hmm.
move. It's been a pretty prolonged declining dollar environment, one of the longer ones we've seen in a while, if I'm remembering that correctly.
Yeah, we had a couple of years where it was wishy-washy. We would get like a
Yeah,
rising
yeah,
dollar and then immediately we get to a falling dollar. We've been in a falling dollar environment now for almost a year, which has been, if you've been positioned well for it, has done great. Whether, you
right.
look at international equities, you look at precious metals, oil, not so much, although that has perked up a bit recently.
Yeah,
Um, but, I think, when we look at the dollar, we got to think about, I mean, the administration has pretty much said they want a weaker dollar. Why are they trying to do that? Well, you make U.S. exports much more attractive. You make imports less attractive. If you're in a trade war with China, essentially we have been, it's been hotter or colder over the last decade, but essentially we've been in a trade war with China. A weaker dollar makes their exports much less attractive.
right.
So you have a lot less capital inflow from the U.S. into China. Um,
And you also have a lot, these foreign governments are no longer purchasing the dollar in the same way they did in the past. I mean, especially in China and then a lot of other areas as well. I know like Saudi Arabia, some like they're not loading up on US debt
Treasuries,
like they were previously. And that has to add some tailwind effects to this.
for sure, for sure. I mean, people are looking for some investments outside of the U.S. Now, I think the Treasury story. the inflows are still pretty strong there
Right.
from
It's
foreign
not a
investors.
concern. It's just
It's not like it completely flipped.
it's not what
It's
it's
just
supposed to
slowed
be.
down a little bit.
Yeah.
Yeah,
Yeah.
exactly.
Um,
Um, and I think part of it is too is, with the yields higher a year or two ago, I think U.S. Treasuries were a bit more attractive than they are
mhm,
now with
mhm.
yields. Worldwide yield spreads a little bit tighter than they were in 2023 and 2022.
Yeah, yeah. But I mean, the declining dollar, we'll continue to see that lower. And when we're looking at, we do that dollar study, we don't see it really have too much of an effect across the U.S. equity space.
Yeah.
We've had declining dollar environments and rising dollar environments. They're kind of split equal, obviously, because you go up or down 10%, you kind of split them down the middle.
Mhm.
Um, I mean, you see a little bit more tailwind effects historically for value-oriented stocks,
Yeah.
which have seen a little bit more of a run over the past few weeks.
Hmm.
But I don't necessarily know if those are correlated as much. You don't really see it's not like growth stocks do bad. It's just sometimes value stocks do better in a falling dollar environment. Broader like S&P wise, pretty much the same. I mean,
Yeah.
there's not that much of a spread between them. Where we do see a lot of changes or a lot of dispersion between returns in the rising and falling environments, unsurprisingly, and nothing new here, international equities and then commodities
Yeah.
tend to see some pretty big swings. So, I mean, on the international equities front, we saw ACWX outpace the S&P 500 last year by
Hmm.
its largest in over 30 years, I believe. You got to go back to like 1992,
Yeah.
I think, to get a bigger spread between the two of those.
Hmm.
I mean, I mean, certainly international was back last year, and
Yeah.
we're working on our second consecutive year of outperformance for the first time in a couple decades
Yeah.
for ACWX versus S&P. Granted, we're a month in, so a lot
Hmm.
can change over the next 11 months. But international equities are looking pretty strong.
Yeah, and not just equities, debt has also done
Mm.
really well too. But yeah, I
Yeah, a
mean,
lot of international debts coming into like our fixed income models. Those are
yeah,
doing pretty well.
yeah. But yeah, I mean, we were talking about ACWX. Trevor, one of the other analysts, pointed out that it returned to a buy signal um, versus the S&P equal weight, and that's the first time it's given a buy signal since it looks like 2006. It's been on a sell signal since '08. So, that's it's quite a long, almost a 20-year stretch of international equities being on a sell signal versus the S&P equal weight returning to a buy signal.
Yeah, and there haven't been a ton of changes in that RS relationship. This buy signal marks the fourth
Hmm.
signal change. I mean, granted, it has technically been a profitable, so each of the trades have worked out. We've seen follow through or at least profitable trades in looking at that RS switching approach. And we've seen international equities kind of close in our Dolly rankings as well.
Hmm.
Domestic equities are still in the lead from a broader asset class rankings perspective, but we've seen domestic equities fall off of a few signals this month. I think it dropped four.
Hmm.
International equities picked up 10. So they're now, at least based on market movement through the 28th through Wednesday, recording this Thursday morning, the international equities based only three signals back,
Yeah.
which is, I mean, that could change in a day.
Yeah.
And we've seen it close in and expand out before. This isn't the first time we've been close over the past year. But that's definitely a pretty interesting area to keep a lookout on. It's not like we saw a big blow off last year and it's reverting
Hmm.
to mean, which has honestly been the norm for international equities. It's been a
Yeah.
few times that we've seen, hey, they're back. Oh wait, they're not.
Yeah.
And they're back and now they're not. Seem to be hanging around for the time being.
And a lot of that had to do with China just being really volatile
Yeah.
from an emerging market standpoint. I mean, I think the most impressive part of this recent rally, or the most interesting or kind of best place to be is developed markets, just
Hmm.
because they've been so consistent. For momentum strategies, that kind of the second part of the piece I wrote, we looked at the RS spread for emerging and developed markets, and developed markets has been much more consistent over the years. Now, emerging market, that RS spread, so the high momentum names have really started to pick up starting at the fourth quarter
Yeah.
last year. So we're seeing kind of momentum and relative strength do really well in both developed and emerging markets, which is good to see.
Yeah.
Um,
And
and we'll
even
see if
with
this trend continues.
Yeah, even with some of the uncertainty from China,
Hmm.
or at least not the blow off improvement that people had come to expect previously, when China starts to rocket, it shoots higher.
Hmm.
Got a little bit of consolidation there recently, but Latin America and South American space has done extremely well. I
Yeah.
mean, you look at Chile, Peru. Brazil is shooting up our country rankings. A ticker like ILF, like that space looks pretty strong. Now,
Hmm.
those areas are getting pretty overbought. But we've seen most of those areas just, I mean, overbought has continued to become more overbought. So I don't know if it's necessarily good to be jumping in at things at 100%, but I mean, could definitely be at least something to keep on the radar there.
Well, yeah, I think the biggest thing for international equities is they're a viable option
Right.
nowadays, more than they have been for quite a while.
Yeah.
So it's not something you have to necessarily overweight compared to your domestic equities, but if you're talking about instead of owning like U.S. small caps, maybe you shift part of that allocation to international
Right.
equities. And they are competitive with large cap U.S. equities now for the first time,
Yeah.
as well. So. I think there's a lot of areas, there's a lot of breadth there, which is good. But talking about overbought areas of the market, precious
I was
metals
going to make that
continue
transition if you didn't. So
continue to keep going.
almost 300% overbought for gold.
Yeah,
If you look at GLD, I think the weekly OBOS, it's up. Yeah, it's 330% current intraday overbought oversold rating. Is that the highest we've seen in 50 years?
I think so.
I mean, it's remarkably high. I mean, talk about overbought continuing to become more overbought. We talk about a lot of these spaces with the um, foreign governments not purchasing U.S. debt anymore. They are certainly purchasing gold,
Yeah.
and I think we've seen that. It's been a consistent theme for the past several years. That's not nothing. That's not anything new in the past 6 months or even the past year.
Hmm.
But we've seen other areas kind of come to the full too. So you just have you have that more consistent demand coming in probably from the foreign governments, and then a recent influx of just more recent demand, and this thing has shot higher. Right.
Yeah, and once you start to get to these levels, I mean, sometimes there's just like nobody wants to step in and start selling any of this.
Right.
There's
Right.
just like, I mean, to put it in context, the top of the trading band on GLD is at 430 and it's
Okay.
trading at 500.
Right.
So, I mean, it's not something where I'm going to go buy gold right now, but if I own it, I'm certainly very happy.
Yeah, up 25% a month.
Yeah.
I mean, I think pretty solid looking there. I think another interesting deal is when you're looking at the default chart for something like this, just seeing such rapid appreciation. I think
Hmm.
it can sometimes be a little bit distorted by some of the breakpoints because it's
Yeah.
just moved up so much so quickly. Looking at like a percentage based chart just shows you how parabolic it's
Yeah.
been. I mean, when you look at this thing on a 2% chart, I mean, just where I mean, multiple consecutive buy signals. The real notable support, you don't even get down to that until the mid 300s.
Yeah. 365.
It's crazy. I mean, that is the entire trading band is in the single column of X's,
Yeah.
which just shows you how parabolic it's been. So that's kind of when you throw the, hey, yeah, it's overbought, but it was 290% overbought yesterday. It's 340% overbought today.
Yeah, it's one of those where, I'm not going to go step in front of this thing and try to short it or anything like
Yeah,
that,
no, no, no. It's continuing to go higher. There are some other areas. I think the miners space have been people are playing that a little bit, which could be an interesting area to kind of keep an eye on there. There's definitely some spaces that you could look to jump in. All those spaces are obviously overbought as well, but yeah, spaces definitely continue to trend higher.
Yeah, and it's trended higher for a while. It's not like this is, I
Right.
mean, kind of this is definitely like a blow off. I don't know if it's a blow off top, but it's just it's parabolic, like you
Yeah.
said. I mean, it's been really since it kind of broke out in early 2024. I mean, it really hasn't looked back
Yeah.
since that
It's
point.
been shooting up. And we generally see that with when we talk about the US dollar movement, falling dollar tends to be very good for gold.
Hmm.
Now we tend to be we're not up on average 100% like we are now, but
Yeah.
we do tend to see improvement in gold when the dollar's declining. We also tend to see pretty heavy inverse correlation between falling dollar and rising oil prices.
Yeah.
Crude oil tends to perform pretty well when the dollar's declining. That has not been the case,
No.
as we've seen over the course of the past year since we've been in this almost year since we've been in this declining dollar environment. But we have seen a little bit of a reprise or retrieval from crude oil recently.
Hmm.
It jumped up to give the CL forward slash futures chart jumped up to give a triple top breakout on its default chart at 63 this week. and at least at the time of this recording, it's shooting higher. It looks like it's probably going to move back to a positive trend.
Yeah, it moved above 66 during today's session, so it'll be back into a positive trend. Um, you know, how much of it is going to, there's a lot of resistance. It's been a lot of chop. I mean, I'm going to call the range between 55 and about $80
Hmm.
on crude oil the last couple of years. Um, I think it's probably going to continue to stay roughly in that range. I mean, there's going to be some geopolitical tensions that flare up occasionally that kind of give it a bid, which I think that's kind of what we're seeing right now with Iran tensions heating up again. But at the same time, it seems like oil supplies, you know, pretty well entrenched to stay between that, I'd say roughly on average $65 to $70 moving forward.
Yeah, and when we're looking at the chart too, I mean, you have on the default chart support at that 66 point, or
Mhm.
sorry, resistance at the 66 points. So even though it's technically back to a positive trend, that's a spread triple top there. So it's going to
Yeah.
be notable resistance. I think widening it out again to like a 2 point chart just really clearly defines ranges of
Hmm.
consolidation that we've been in. You can clearly see the 56 level as a very notable support that it's been in for a year, that's held on 4 different occasions. And then from here, the 70 level is going to be probably a good line in the sand
Yeah.
as you're looking higher as well from July of last year. And then you get the mid 70s, and then like you said, 80, very, very notable
Yeah.
from there. So there's like it's kind of like every $5.
Yeah.
There's notable resistance kind of baked in. Yeah, we'll see if the trend holds. I mean, if historical moves were going to come to fruition here. So if we saw crude oil catch up to what it normally did, it has a ways to go
Yeah.
if it was going to catch up to the historical average for declining dollar environment.
Hmm.
I do think that space is pretty interesting though, because when you talk about rising or falling dollar environments, most of the previous falling dollar environments have been when the US was a net importer of crude,
Hmm.
and now we're a net exporter of
Hmm.
crude, right? So it's kind of new territory for
Yeah,
for
that's a
how
really
that
good point.
affects the price action moving forward.
That's a really good point. And then one thing I will also mention is on the energy front is XLE, the kind of the energy sector fund, is going to hit a new all-time high today, and kind of breaking through resistance right above that
Oh wow.
49 level.
Yeah.
It is heavily overbought now, but like we are talking about earlier, heavily overbought things can get more
What's
heavily
not involved?
overbought. Yeah. So, I mean, that's an interesting option. I think whenever you see kind of crude get into that 50s area, not necessarily that it can't go lower, but you typically, I mean, producers just aren't incentivized to crank out more oil once you
Right.
get to the low mid 50s. Um, and it depresses their equities a little bit. So I think there's good opportunities occasionally in the oil space once oil prices do come down.
Yeah.
Just kind of stacking it up and waiting for them to kind of bounce back in the range that they've been in.
Yeah.
Um, Not something that you have to necessarily do, but just something I've
Well,
noticed
no, but
over the
it's always
last
good
couple of
things to kind of
years.
keep in mind there.
Yeah,
Yeah, I mean, in looking at other areas too, I mean, we talked about what's not overbought. I mean, we looking at Microsoft, we looked at other stuff that has had a good run. I don't know if we want to dive into all those though, for the sake of time. Maybe we save that until after we get. I think Apple's supposed to report after market close today on
yeah,
Thursday. We get Google reporting next week, and then we're just waiting on Nvidia.
yeah. Always waiting on
Always waiting
Nvidia.
on Nvidia. But yeah, maybe we can kind of save those
Yeah,
for next
we'll
week to
do a
look through.
big tech earnings review next
Yeah,
week for the podcast.
there we go.
Yeah,
Yeah,
yeah.
we'll be waiting. Cool. You got anything else put on there?
I have nothing else.
Awesome. Thanks for letting me join you here.
Yeah, it's been great.
And everyone, thanks for tuning in this week. We'll be back next week to touch base on other action.